following program is an exclusive Disruption Networks production.
Hey, it's Adeline Vandyke from Coldwell Banker Faith Properties in Utica. I always get asked, why do I love real estate? It's very simple. I love my clients. I love every single thing about helping them find or sell their home. Making sure the home is solid and ready for sale, or solid and ready for the buyer's inspection, to making sure that they're getting the best rate on their mortgage, making sure they're getting the best price on their house. You know, just everything involved in the sale is vital. My absolute favorite part of real estate is when a buyer walks into the house they're going to buy. I can feel it before they even know they're loving the house. It's just that obvious. So I'd love to experience that feeling with you. So give me a call. Adeline Vandyke, Coldwell Banker Faith Properties, 315-404-6431. Or you can find me on Facebook or visit my website at centralnewyork.com/Adeline. Thank you, and I look forward to welcoming you home.
When it's your hard-earned money on the line that you are investing into a home, it makes sense to choose a proven professional to assist you in making one of the biggest investments you may ever make. Josh's dedication of over 20 years to the home construction industry allows him to bring knowledge and experience to your doorstep. That means you can feel confident and comfortable with his service to you. Past clients love his attention to detail and thorough written reports. By allowing Priceless Inspections to help you make a well-informed decision concerning your property, you will find that a quality inspection is priceless. Follow Priceless Inspections on Facebook or call 315-525-8725. In the Mohawk Valley, for the best real estate service, you gotta have faith. Caldwell Banker Faith Properties, 315-735-2222. Choose a proven professional to assist you in making one of the biggest investments you may ever make. Josh's dedication of over 20 years to the home construction industry allows him to bring knowledge and experience to your doorstep. That means you can feel...
Hello, everybody. It's Adeline Vandyke with Home Free, and I am here today with David D'Amico, and I'm actually on the hot seat. I'm liking this. So, hi, Dave. Can you hear me okay?
Yes, Adeline. How you doing?
Good, good. How have you been?
Good, good.
Good. I haven't talked to you.
Keeping busy.
Yeah, I guess so. I haven't talked to you in like 10 minutes when I asked you to run some numbers for me. So what we're going to do today is we're just going to take people through the mortgage process and let them know what to expect, because I tend to find that buyers are a little fearful of, you know, the rejection or whatever. They just don't know what to expect. So they're like, well, I'll be denied or whatever. And that's usually not the case. So,
right. Yep. You don't know until you try. So the phone call, getting started, you know, like I said, there's a lot of programs out there, and you really don't know until you make that phone call to get things started.
Yeah, definitely. So what should somebody expect when they do call you? What kind of questions are you going to ask them?
The first phone call is just going to be some general questions. Name, social security number, date of birth, current address, where they work, how long they've worked there for, and basically just how much they make at their current job. That's really all that I need to get this pre-qualification process started. That'll allow me to pull the buyer's credit report and then actually find what program would fit them best.
Nice. So it's really not much. I mean, I would say that's maybe a 5-minute phone call.
You know what? Not even. Maybe 2 or 3 minutes. You know, if they don't have time on the phone, I can always just email the application to them, and they can complete it on their time and get it back to me. It's all complimentary, so there's no charge for me to run the application, which, you know, a lot of people aren't aware of that as well.
Well, and I always tell people, even if you call and you're not approved at first, at least you'll find out what you need to do to get to that level where you are approved.
Yep, absolutely. I mean, not everyone that calls me, you know, I can't do a loan for everybody, but if there are some things that I can do to make them get to where they need to be, I'll always do that. You know, go the extra mile and let them know, you know, if they need to get their credit score up, I'll give them some pointers as far as what they need to do to get that up. And then, you know, maybe a month or two down the road, they'll be ready.
Yeah, and sometimes debt to income can affect it too, right?
Yeah. Kind of to correct that, I mean, like I said, there's a lot of different programs out there. Some of them are a little more lenient on the debt to income ratio, but if that's an issue, we can always try and add a co-borrower to the file to fix that problem, or we can just, maybe have them pay off some small debt that they may have to get their debt to income ratio in line to where it needs to be.
Yeah, I know my daughter just mentioned last night that she's paying off a few credit cards in preparation,
Yeah.
so she'll be calling you soon.
Sounds good.
So another question I actually got emailed to me was, what credit score do you have to get a mortgage?
That's a good question. Ideally, the magic number is kind of 620 or above. Everyone's kind of different. We do have some lenders that will go down to a 580. I've gotten quite a few loans closed with people in that 580 to 600 range. Again, that's where a lot of even realtors and other people in the business don't think that they'll be, their customers will be able to get a loan if they have like a 580 credit score. That's not true. We have 2 or 3 lenders that will go down to 580, and we can get them done that low. So,
yeah. Well, I know this because I've sent people over for that.
yeah.
So what are these different loans?
They're not the easy ones to get done, but we can get them done.
Well, we're not afraid of a little work.
Nope.
So what are the different types of loan products? Let's go over just the general gist of what people can use for different loans.
Sure. Yep. I usually talk about 4 different programs. I would say the majority of the loans that I do for my customers are FHA loans. It's a government loan. It's a great program for first-time home buyers who may not have a lot of money for a down payment. The minimum down payment is 3.5%. They allow you to roll in 6% of closing costs. So a lot of the times, the buyer is getting into their first property with just 3.5% out of pocket. Rates are a little bit lower on FHA right now. Conventional would probably be the next most popular product. A little bit more of a down payment. The big thing about conventional loans, if people do have at least 5% to put down, I would really tell them go conventional. The mortgage insurance would the private mortgage insurance would fall off once you hit 20% equity in the property.
Yeah, and that can be expensive sometimes.
Yeah. It's definitely for people who have some money saved up and want to put down a down payment. Now, if you have 20% to put down, you would definitely go conventional because that would eliminate the mortgage insurance right off the bat, so you wouldn't have to pay that at all. That's with 20% of your own funds down on the property.
So anything less than 20% has to have mortgage insurance, no matter the loan? Less
than 20% will have to have mortgage insurance, yeah, until again, you reach that threshold where it will fall off, which is 20%.
Okay. And with FHA loans, are they always for the life of the loan, or do some of them drop off?
FHA loans now are, yes, the mortgage insurance will stay on there for the life of the loan now. That's the biggest negative about an FHA loan. What I tell my people is, grind it out for maybe 3 to 5 years and then refinance into a conventional loan where it will eventually fall off and lower your payment.
Right, yeah. Or hope that their equity grows in those couple of years if they make the right changes.
Yeah, absolutely.
So what's the third type?
The third one is probably, I'd say, kind of USDA is a more for rural properties. So, outside of big cities, it's 100% financing, so there's no money down. They also allow you to roll in closing costs. I've done a bunch of these for people, and there have been some instances where the buyers have actually gotten money back at closing for things that they've already paid for, like appraisal and their homeowner's insurance. So, if you have someone who's looking in the outskirts of, say, Utica or somewhere outside of Rome, that's a really, really good program, again, for first-time home buyers as well.
A lot of areas in Herkimer County.
Herkimer County, yeah, all of Herkimer County is eligible for USDA financing, no matter where it is.
Yeah, so I mean that's huge.
Oh, absolutely, yes, it is. You just have to. There's a couple of restrictions regarding income, household income. Differs by county, but as long as they fit the parameters, it's a wonderful program for people who just might not have the money for a large down payment. And then the last one would be VA loans, which are obviously for veterans. Again, 100% financing, no mortgage insurance. You do not have to put any money down. It's 100% financing, no mortgage insurance on a VA loan.
Yeah, that's a big savings.
Yeah.
Nice.
But, all 4 programs are great. It just depends on the person's situation as to what they're looking for and what resources they have and what their expectations are.
Yeah. So what are, I know there's condition issues for, USDA, VA, and FHA loans, and well, for conventional as well to an extent. What are the conditions? I mean, what types of things do buyers want to look for in houses that are just going to be red flags for an FHA appraiser?
They're definitely going to want to look at the peeling paint. That's like the number one thing that appraisers will look at when they go to appraise the property.
They find it almost every time.
Yeah, it's usually, I see it mostly around like windowsills. Mm-hmm. If there's a garage, an old garage has kind of gotten beat up by the weather, if there's any peeling paint, they're going to mention it in the report. It's going to cost anywhere from $100 to $150 for a final reinspection fee. So, I try and tell people, before we order the appraisal, make sure there's no peeling paint. Make sure there's railings up wherever there are stairs or steps. Yeah. Things going into the basement, there's always got to be a railing going down. Porches, decks, patios. Just always make sure there's railings up and there aren't any safety hazards. Conventional, like I said, conventional is a little more lenient on that stuff. They don't really worry about that. But for FHA, you're going to really want to make sure that all that stuff is taken care of before the appraisal is ordered.
Yeah, and
to
USDA
save some money
as well. I know actually this was one that we did together up in Vernon where the whole barn had to be painted.
Yeah.
So the buyer and the seller got together with some with some sprayers, and they painted the whole barn. Like in an hour, wasn't it? It was like incredible. Yeah. I couldn't believe it.
Yeah. The thing is, they're not looking for like high quality work. They understand the situation. Scrape it up, put a little fresh paint on it, and they'll usually sign off on it, and it'll be good to go.
Yeah, as long as it's covered, and and especially like this time of year. I'm looking at a house with a younger buyer, and it's going to be FHA, and the garage needs paint. And I'm like, dude, just slap whatever you can up there. It's not going to stick no matter what you get. And just in the spring, you do a good job of it.
Right, absolutely.
But you have to get it past the appraisal at this point.
Yeah, you can also hold it back in escrow if the weather's too bad and the paint's not sticking. They'll allow you to get an estimate as to how much it's going to cost to repair whatever needs to be repaired, and then they can hold that back at closing in an escrow account, and then they can get out there and do it when it's, when the weather breaks.
Right. So with a VA loan, are there any condition issues as well? Are they similar?
You know what? To be honest with you, a lot of people think that those are tough, but they're really a lot easier than FHA. I'll tell you that.
Oh yeah.
As long as you just make sure that if you have a veteran that you're working with, they do need to provide their certificate of eligibility and their DD-214 form, it's called. If they don't have the certificate of eligibility, it's not a big deal. We can order one and get it for them. But, those are the two things that I run into that veterans usually sometimes don't have, and we need to get those ordered. But, everything else is pretty much the same. As far as conditions go.
Excellent. So what are we looking at rates right now?
They have gone up. They've definitely gone up.
Yeah.
I was in the ballpark I want to say a month ago, so end of last year into January, the FHA rates were right around 3.5%, and now they've gone up about a half a point to around 4. Conventional rates are around anywhere from 4.375 to 4.5, and these are for 30. This is for the 30-year fixed program.
Yeah.
Obviously, the lower terms are going to be a little bit lower, but and they're still low. I mean, it's not really affecting payments all that much to go from 3.5% to 4%. To be honest with you, they're still quite low.
Yeah, but we've noticed that when the rates jump, our buyers start jumping because they're afraid they're going to go too high. So we've noticed that the rates jumped, and it was more so we noticed the buyers jumped, and then we were like, oh yeah, let's look at Dave's email.
Yeah.
So, yeah, a lot of buyers have been out. They're a little nervous that the rates are going to jump again. But
I hope not.
I know.
This is good right now. If they can stay here, go down a tad, I think we'll still be good to go for the year.
Yeah, I hope they stay stable, and hopefully they will. So, what have you seen this winter? Are you seeing that this is a busier winter than previous winters?
It's starting to pick up right now. I think I finished off the year. November and December were great months. They were super busy still.
Right.
Beginning of the year, it did slow down a little bit, and now here in February, it's picking up again. I think last year was my busiest year in probably 8-10 years. I don't know what contributed to it. I know the rates were low. People buying houses for the first time, but hopefully it just 2018 is the same way or better.
I hope so. Yeah, it'd be nice.
We'll see.
I see a lot of younger people getting into the market.
What's that now?
I see a lot of younger people getting into the market.
Yes. A lot of young couples looking for their first home. They're realizing that they're paying $750, $850, $1,000 for rent, and they're looking into buying a piece of property where they're going to be either paying the same or a little bit lower than what they're actually paying to rent. So yeah, there's a lot of young couples calling me looking for pre-qualifications. Definitely.
Yeah, but what's the rough payment on a $100,000 house? If taxes
at $100,000.
Yeah, let's just say taxes are medium range for the area.
I mean, I would say somewhere between $650 to $850 in that range, depending on how much the taxes are.
Yeah, and taxes make a huge difference, don't they?
Yeah, they do. I mean, if you find something where the taxes are $2,500, that's on the low end of what I'm seeing.
Right.
You're talking $2,500. You're talking $208 a month. You raise that to $3,500. You're looking at $291. So that's a big difference.
Yeah. In
a monthly payment. It's almost $100. But yeah, it's something people have to take into consideration. I know, a lot of areas are a little bit more than other areas as far as school taxes and whatnot, but it's definitely one of the things buyers have to take into consideration when they're searching for their home.
Yeah, I always make it a point to hey, this taxes are $6,000 on this. And they're like, oh, okay. And I'm like, that's $500 a month. And they don't seem to really realize, because when you're breaking down the 100,000, you're breaking it down over 30 years, which is 360 months. So as you change that number, it makes much less of an effect on your payments. And
yeah, absolutely.
Yeah, it's hard to explain.
They may be able to find more of a house too, where if the taxes are a little bit lower, they may be pre-qualified for a larger amount as well.
Oh, absolutely, because then they're putting their money into the house instead of the taxes.
Yep.
Yeah, it makes a huge difference. They have to shop those taxes.
Yep.
So I know I hate these kind of mortgages, and you do too. But what's coming here.
I know what you're going to ask me, yeah.
The rehab loans, the 203K, and whatnot. Are you still doing those, or have they made you want to jump off a bridge and you decided that no more?
Well, I've done, like I said, like I always tell you, I've done probably in the last 8 years, maybe like 8 of them.
Oh, and I
So
was one
maybe
of the
like,
lucky
I get
ones.
one a year, and the person actually goes through with it. But I mean, I'm not going to knock the program. It's a great program, and yes, I do still have some lenders that still offer it. A lot of local banks, credit unions have gone away with the program. But I always just tell my customers it's going to take a while. You have to be patient. It's not that 30 to 45 day turnaround time from start to finish of the loan. I have done some that have taken, a couple months, 3 months. I've done one that was like 5 or 6 months. It's just,
Yeah, I think that was ours.
yeah. It's the problem. I mean, not that it's a problem, but you have to. What a 203K rehab loan is, first of all, it's basically kind of a property where you want to put some work into it, and you want to include all of that work into your loan. So you're basically financing the house and all the improvements that need to be made. The big thing, some people don't like this, but we need to get estimates from licensed contractors. So the person buying the house cannot be the one that does the work. I've gotten calls where people want to do it themselves and, to save some money here and there maybe, but the estimates have to come from licensed contractors, or else the deal can't be done. But that's the biggest thing that I have talked to people about that they really don't like about the program. But it is available. It is tough. It's going to be some headaches and hoops to jump through. But yes, we offer it.
Yeah, because then a project manager gets involved in this and that. It does get a little consuming.
Yep.
Yeah, because I know we ended up with the project manager, and he didn't like the changes that they were going to make, and he thought that the house needed different changes. So they really can kind of dictate a little bit of what's done.
Yeah, they can. I would say it's a better program for some little things that the buyer may want to have done. If you get into some major projects, that's where it gets a little bit tougher. But it's really not too bad, and it will go pretty smoothly if there's little things here and there that they're looking to upgrade. Maybe kitchen cabinets, a driveway, things on the lower end that
right. Maybe not a whole gut
that
and
aren't too
remodel.
big of projects. Those go pretty smoothly.
What about construction loans? Have you done many construction loans lately?
I have not done one in a very, very long time. It just doesn't. It just doesn't seem like there's that much new construction going on up, in the area.
Yeah. I haven't seen too much either.
Have you? No.
Well, I have one buyer that's building right now, and they're building in New Hartford. So.
Okay.
Yeah, but not too much. Yeah, it's the time of the year too, so hopefully we'll see some more of that. But I think our housing.
Yeah, we can do the end loan. We cannot do construction loans, so we can only do when the property's all put up and built. We can do the end loan on those.
Okay.
I know a lot of builders want to get draws and stuff like that during the process, but we don't have any programs for. If they call it like a construction to perm loan, to where you offer the builder some draws throughout the process.
Nice. So, and now let's go with another kind of obscure one. What is a jumbo loan?
A jumbo loan, I don't see many of those. The biggest on the bigger side, about 250 to 350 are the ones are the more larger ones that I see. Jumbo, I want to say, is anything over 450 or 500,000, I believe.
Okay.
Again, it's just not really a niche of ours. We usually handle probably anywhere from around like 75,000 to, like I said, maybe 350.
Okay.
So I know that I think it's like 450 or 500,000 when it becomes the jumbo status.
Yeah. And you do mobiles, like trailers on land, but not in lots.
Yeah, that's correct. We can only do double wides, so we can't do single wides. We can do double wides.
Okay.
I have a couple lenders that still offer financing for those. They actually do them FHA, so I mean it's still 3.5% down payment, rolling all the closing costs. We're one of the only ones around that still do financing for double wides. But yes, they have to be on their own land. They cannot be in a mobile home park.
Yep.
I think 19. They have to be manufactured
Past
1978. I believe is the cutoff.
76,
and
I think.
The other major thing is they can't be moved, so they have to be in their original location
And anchored, right?
and anchored down. Yes, they have to have tie downs and all that. But yeah, we get those done all the time.
Nice. So let's move on from the actual loans to the process. So once the buyer has their pre-approval, they go out, they find the house, we negotiate the deal, and boom, now we're ready to make application. What does the buyer expect from the time of offer to the time of closing?
So when they have an accepted offer, at that time I will gather their income documentation, their asset documentation, and basically have them sign the mortgage application and all the standard New York State disclosures. Preliminary stuff, we're going to need to show the bank 2 years worth of W-2s if they're a W-2 employee. So 2017 and 2016 W-2s. If they're self-employed, the banks will require them to show their full, complete tax returns for 2 years. As far as assets, let me go back to the income. They will need to show 2 pay stubs as well. Assets, just copies of their bank statements from the past 2 months. With the bank statements, a lot of people don't understand this. We need every page to the bank statement. So if there's 5 pages, I know some banks, 1 page may be totally blank.
Right.
They're still going to require that 5th page. So 2 months worth of bank statements, copy of their driver's license, have them sign the application and the disclosures, and we send it right to the lender for underwriting review. I do have we have I think now 13 lenders that we're signed up to do business with. I obviously have one preferred lender, Plaza Home Mortgage, which is who I try and send all of my loans to.
Yeah.
They usually operate on a 1-day turnaround time from when I submit the file to underwriting to when I get the full approval and commitment letter back.
Yeah, I really like them.
Yeah, I have a great relationship with them. Their support staff is wonderful. Their underwriters are great. We can call them whenever we want and, go over files. If we have questions, they get right back to us. So, I mean, it's huge getting your commitment letter in a timely fashion, because basically the commitment letter basically says the lender's committed to give you the loan. There will be some conditions that need to be met. Usually just standard stuff like appraisal, title, homeowner's insurance. They may need a letter of explanation regarding something here or there. But once we get that commitment letter, then we're going to order the appraisal. We wait till we get the commitment letter, because once we order the appraisal, that money's gone from the buyer. We can't get the money back. So we want to make sure we have a full approval, no issues with the file before we take any money from our customers. Everything comes back with the appraisal. Then we're just waiting on the title work. You probably know this does take some time.
And and the commitment also usually
kind of handle the attorneys are the ones who handle the title work. But I mean, from start to finish, if everything goes smoothly, I'm usually getting things closed between 30 to 45 days from when I submit everything to the underwriter for a full review.
And that's excellent. I kind of credit that with the commitment coming so soon, because a lot of the attorneys won't even touch the title until the commitment letter is issued. Yeah,
you're right. You're absolutely right. Yeah, they won't start doing anything until they have that piece of paper in their hand, and then that's when they start getting the abstract from the seller and sending stuff to the buyer's attorney so they can get the title documents going.
Yeah,
definitely. Getting that commitment letter back quickly definitely gets things going a little bit quicker.
Oh, definitely. It makes everybody feel a little bit better, I think. It's that, okay, we've definitely really took a look at this and we're ready to loan this money
Yep.
as long as all these other things line up.
Yep.
And so appraisal, I mean, that's really not too long of a process, couple days.
Not really. There's a lot of great, I mean, there's quite a few appraisers. Everything has to go through an appraisal management company these days. Back in the day, I was able to call, a local appraiser on my own to get him or her out there to the property. But we have to order everything through appraisal management companies. I'm seeing probably when I order the appraisal through the online portal, it usually takes about a day or two for the appraiser to call the realtor to set up the appraisal. Once he or she gets out there, performs the work, usually within 3 days, the final product is sent into the portal, and I can view it, and we can see how it came back. So, I mean, from start to finish with appraisals, I'm saying maybe a week, which isn't too bad.
Yeah, that's not bad at all. Not bad at all. So you're looking at, 45 days from application, to closing. That's not too bad. No.
I mean, I personally try to get every deal. I wouldn't say closed, but I try to get everything done on my end as soon as possible.
Right.
Just because of the fact that you never know what can happen throughout the process. I've had, not, God forbid, someone I've had people lose their jobs through the process.
Oh, yeah. Government shuts down, and you're doing
cut.
Yeah, government shuts down, and you're a government employee. Guess what? You're not getting verified.
Absolutely. I mean, there's lots of things that can happen throughout the process that can, kill a deal. One big thing that just kind of came up, and I like I said, I try and tell people this: when you're going through the process of a mortgage, you're not going to want to open up any accounts. And what I mean by accounts are like credit cards. You don't want to get any new car loans. You don't want to incur more debt than you already have while you're going through the process of buying a house.
Right. Yeah, and gosh, please don't get any loans. Don't buy a car.
Yeah, I know.
So honestly, the process really isn't that daunting. It's, a quick phone call, 2-3 minutes, approved, or you get a list of, things that you can work on. Go find the house, application, couple days for commitment, appraisal, boom.
It's easy. A lot of people don't know how easy it is. I mean, everything this day and age, we can get everything e-signed by our customers. We're not going here, going there. We're not having people come to our office. I mean, everything is convenient, quick. I try to make it as easy and stress-free as possible. But yeah, I mean, it's a very easy process.
Yeah, it really is. So we're open up for questions. So if anybody has any questions, feel free to chime in. And Dave, when you get done, make sure you share this so everybody knows how good you were on the show tonight. And so do you have any pointers for people as they're preparing to get a mortgage? Like my daughter, she's thinking, what do I do? Well, I have 2 daughters, actually. One of them just the other day says, Mom, should I open a credit card so I can build up some credit? And I'm like, oh, please, Jesus, don't. But what advice would you have for, say you've got an 18-year-old kid and they're like, I want to buy a house in 2 years. What do you tell them to do?
I would just first give me a call. Like I said, it's complimentary. I will be straight up and honest with everyone that I deal with. You're going to want to get your credit pulled. You're going to want to get your figures into the system to go over payment. You're definitely going to want to go over payment. You're going to want to go over, you're going to want to think about what your utilities are going to be, because a lot of people just think, look, here's my mortgage payment, I don't have to pay for anything else. But I mean, you're going to have utility payments, garbage, there's other things besides just the mortgage payment.
Yeah, and
so you're going to definitely want to talk about all of that stuff and figure out where you are with everything. with as far as like location, you're going to want to know where you're going to want to be as far as school district. I mean, if you're a young 18-year-old kid, you might want to start a family. You want to make sure you're in the school district that you're going to want to be with, for your future kids possibly.
Mm-hmm.
But making that phone call, just having a check on your credit, going over the figures, that's what I would.
The figures are huge because so many people don't understand that. They'll come running up to you and they'll be like, "I'm approved for $200,000," and you're like,
mm-hmm.
"You work at Nice and Easy. You don't want a $200,000 house because you can't afford it comfortably. You're going to be eating ramen noodles. You're going to be on that ramen noodle budget where that's all you can afford to eat." And so, yeah, there's a big difference between the affordable number and the approved number.
Absolutely, yes.
Yeah, and taxes make a huge difference. So we want to make sure that we keep the taxes in mind when we're, factoring those things in.
Yep.
So what do you have anything to talk about with new products that are coming up with mortgages, or any exciting news with mortgages, or is everything pretty status quo?
You know what? I did get, let me see this. I did get an email today from one of our lenders regarding, this is a really tough subject for people who are self-employed. It's very, very hard for them to get a mortgage right now.
Yes, it is.
It's just due to the fact that the way that the lender or the bank or credit union, wherever you go, they're gonna do the same thing. But they look at your adjusted gross income. So if you're self-employed and you show the bank your tax returns and your gross earnings were $100,000 last year, but after write-offs, your adjusted gross income goes down to $50,000. That's what they're going to use to qualify you. So I have a new program that just came out from one of our lenders. I just got the email today at 4:15 today, and what it is, it's a 24-month bank statement program where they'll just look at your business deposits and stuff like that, and they'll average that out instead of making the self-employed borrowers submit their tax returns.
Oh, wow.
So, that's pretty huge right there.
Yeah, that makes a
for
big
people
difference.
Who are self-employed.
Wow. Yeah, can you forward me that email, please?
Oh, absolutely.
Or a little, shoot me a little something on that so I remember to tell the girls.
I definitely will, yeah. But yeah, that could be a huge program for people you're dealing with. It's good for primary houses, owner-occupied properties, second homes, investment homes. It says here. So
right. Well, it's good for realtors. We're all self-employed.
Oh yeah.
We have big expenses. So what looks like...
Yeah, you're crazy if you're not writing stuff off. You do it for a reason. So,
yeah, exactly.
They're finally getting back to where they're going to hopefully allow more self-employed people to get qualified a little bit easier here now.
That's nice. That's really good news. All right, what else you got? That was a really good one.
Yeah. We do have... There is a lot of people don't know this too, which I've been doing a little bit of. We were talking about mortgage insurance earlier on, and on a conventional loan, there is a program out there where even if you put the minimum down payment of 5% down, we can put you on a program where you can eliminate and not have the monthly mortgage insurance. It's basically called lender paid mortgage insurance. The offset is the rate is a little bit higher than what the going rate would be. But 9 times out of 10, that if you eliminate that mortgage insurance and your rate's a little bit higher, you're gonna have a lower payment.
Yeah, so you're still making.
So what I'm trying to say is, if you have 5% to put down, you can go conventional. You can get on a program where you will not have to pay monthly mortgage insurance right off the bat.
Yeah, that's big.
So yeah, that's a big one. A lot of people don't know.
Yeah.
But other than that, it's just the FHA stuff is going strong. I'd say probably 90 to 95% of the loans that I do are FHA loans.
Yeah, I would have to agree as far as what my business is too. We do a lot of FHA.
Yeah, I don't know. I don't know what it is. I think it has to do with the little money out of pocket. It's a very good program for like I said, the first-time home buyer just doesn't have too much to, dip into for a down payment. Even if people do have quite a bit saved up, sometimes it is good to kind of try and save some of that money. Don't put it all into your
Right.
first house.
Yeah.
You really never know what's going to happen as far as things down the road. You might need to, improve some things.
I've had a couple of instances where my clients have said that their money was making more money than the rate. And they're like, my money's making 5%, the rate's 3.5. I'm making 1.5% on my money, more than, so why would I take it out?
Yeah. I mean, I try and make it a point to give some people some different scenarios as far as down payments and stuff like that. And in the long run, for every $1,000 you put down on a piece of property, it affects it lowers your payment by like $5 or $6. It's really not that much.
Mm-hmm.
I'd rather have that extra $1,000 on me to do what I,
Yeah, to redo the floors or whatever.
Yeah, exactly.
Yeah, and that's, I think a lot of people are thinking that way too. I've also seen I've had a lot more veterans lately too, which has been nice. So I think a lot more veterans are taking advantage of their benefits with those.
Oh, absolutely, yeah. And they can get multiple loans too. It's not, you're a veteran, you can get multiple VA loans. Some veterans don't know that, but I mean, it's just there's some instances if it's your second one, they hit you a little bit harder as far as the VA funding fee that you have to finance into your loan. But I don't do too many VA loans. I have done a few. I did a few last year for some people that went quite smoothly. But yeah, I would. If you have a veteran, definitely get that certificate of eligibility and go for that VA loan. It's a great program.
Yeah. And now let's talk about flood insurance and flood zones. And yeah, I know they were paying right in the pot.
Yeah.
But I had a couple of flood zones sneak up on me this year, where you look at the house
Yeah,
and you wouldn't think it's even close.
I usually don't find out about the flood zone issues until everything's been sent to the bank. And when you send everything in, the bank's going to do their due diligence, and they're going to check obviously the property to see if it's in FEMA's flood zone. If it is, they're gonna require flood insurance, which can get costly. There are some insurance companies where the rates are a little bit better than others, but I mean, it's definitely going to make a difference if it just sneaks up on you as far as the monthly payment. You know what I mean? If we don't know that the property's in a flood zone when we begin the whole process, we're not putting that monthly payment into the estimated mortgage payment.
Right.
So in times when we find out, we have to add somewhere, sometimes $60, $100 a month just for flood insurance, which sometimes can kill a deal. It could bring the debt to income ratio over the limit. It could scare a buyer off. But I mean, it's always good to, make sure we know if it is in a flood zone or not. But the maps seem like they're always changing. But
yeah, I usually I find Googling FEMA flood zone by address, and it just brings you up to the FEMA maps, blah blah blah. But I Google it because it's just easier than remembering the address. And I just type in the address, and boom, it'll pop up a little map. And if you're in the blue, you're not buying that house. Or you're paying more insurance
of properties that are kind of right on the edge. And I've been told that if any part of the property, albeit like the back deck, I think we had one where it was like a back deck or something, was the part of the property that was in the flood zone, and they still were requiring it to get flood insurance. So,
yeah, you and I had one that we just closed, actually. It was the last 2 feet of the property. The back 2 feet of the property was in a flood zone. Yeah. But beyond that property was an 8-foot wall. And it's like, yeah, no. So I told her to elevation certificate. I said, get an elevation certificate, and a lot of times that can help.
That'll clear it up, yeah.
Yeah, but the flood zones are tough. they're tough.
Yeah.
They move, and everything is flooding lately. I mean, my goodness. We've had a lot.
Snow melts, and then it's done.
Yeah, it's been ugh. All right, so I think we've covered a lot of mortgage things. I'm not getting any questions here that I can see. So I think we're good on that. So let's get to know Dave a little bit. So, Dave, married, kids. Yes. Tell us.
Yes, married, 3 kids. They keep me out of trouble.
They keep you running.
I've got a senior in high school, a boy who's a senior in high school, a 10-year-old boy, and then an 8-year-old daughter, Julia. But yeah, they keep me busy. The boys play baseball. Julia's into softball now, so they definitely keep me busy. She's a
little mini me of your wife. She's just adorable.
Yeah, she is. She's a spitfire. She's a handful. She's 8 going on like a teenage 16.
I love it. That's too funny. So, do you have any like predictions for? Do you think rates will remain stable? Do you think, we'll see a big increase or a shake up?
My opinion is I think they're going to stay pretty steady now. We just had a time where they've gone up here in the past week, 2 weeks. So I think they're going to stay hovering where they are now, hopefully for a while, and then maybe I really can't predict anything other than that. I mean, that's what I'm hoping.
Right.
I'm hoping they don't go up anymore, but they're still, even though they did go up, they're still very low. I would not tell people to stop shopping for a home if they're looking right now, just because of the rates going up a little bit.
Yeah, I agree, because I think the values are still low. I think we're very affordable around here. I mean, crying out loud, I was
absolutely
kind of estimating a payment roughly earlier, and I'm like, it's $700, dude, for New Hartford schools, 4-bedroom.
Yeah.
You're crazy. It's nothing. It's
and if you're saving money, if you're going to be spending, if your mortgage is going to be less than your rent payment, you can always put that extra amount right towards the principal of the mortgage and pay it off even quicker. There's no prepayment penalties on any of the loans that we do. So I mean, if you got a little bit of extra money 1 month, slap it on the principal and you're doing just that much better.
Well, yeah, because if you double the principal every month, you'd effectively cut the loan in half.
Yeah, it would be like a biweekly payment. Yeah.
Yeah, so that could be huge. I mean, then you have a 15-year mortgage.
Absolutely.
If you're 30 years old, by the time you're 45, you don't have a mortgage.
You'd be in good shape. Yeah.
Yeah, then you can travel. So, how do people reach you when they need to see where they stand as far as getting a mortgage?
I just give people my cell phone number. That's the easiest way to reach me. I mean, the business is pretty much 24/7. I mean,
I see you working.
A lot of times people are looking at homes after they get out of work, weekends. So, I mean, my cell phone's always on. I get people calling me on the weekends after hours. I love what I do. I'm always here for people. I learned when I first started doing this, you got to be available. You have to be honest with people. You can't just tell them what they want to hear. It's easy. Just call my cell phone. I don't answer. I will definitely get back to you as soon as possible. But I usually answer every call I get if I can.
Okay. Dave's cell is 315-749-4248. So if you need Dave D'Amico, give him a call. He's really, really excellent. And yeah, I know you work 24/7 because I've called you at 11 o'clock at night. Like,
yeah.
Oh my God, I just got to call the agent. They got another offer. I need an approval. You got to up my rate. Yeah, so I torture you pretty well.
Yeah.
I said, your wife, Malia, I said, oh God, she's going to hate me. Oh, it's too funny. Dave, I know you're busy, and yeah, it's been a crazy week, so I want to thank you for joining us. Do you have anything else you want to add?
No, I mean, I love working with you guys. You guys all do a great job. There's a reason why you guys get a lot of business, and I will refer, anyone I can to you guys, you, Lori, and Patty. I think you guys are some of the top agents around, and I appreciate you giving me a call to do this tonight.
Thank you so much. Well, you know how I feel about you. I think you're one of the best.
Oh yeah.
And it's the lessons you've learned. It's the honesty and integrity and the work ethic. It makes every bit of difference.
Absolutely.
So thank you very much, Dave. Have a good night.
Yes, you too. Thank you.
Bye-bye. Bye. So those of you that want to call Dave, it's 315-749-4248. And I want to thank you for joining me tonight. We'll be back next week. I'm not sure who the guest is yet, but we'll have a little bit of a surprise for you. So thank you very much, and share. Hey, it's Adeline Vandyke from Coldwell Banker Faith Properties. Why do I love real estate? It's very simple. I love my clients. I love every single thing about helping them find or sell their home. Making sure the home is solid and ready for sale, or solid and ready for the buyer's inspection, to making sure that they're getting the best rate on their mortgage, making sure they're getting the best price on their house. Just everything involved in the sale is vital. My absolute favorite part of real estate is when a buyer walks into the house they're going to buy. I can feel it before they even know they're loving the house. It's just that obvious. So I'd love to experience that feeling with you. So give me a call. Adeline Vandyke, Coldwell Banker Faith Properties, 315-404-6431. Or you can find me on Facebook or visit my website at centralnewyork.com/Adeline. Thank you, and I look forward to welcoming you home.
In the Mohawk Valley, for the best real estate service, you gotta have faith. Coldwell Banker Faith Properties, 315-735-2222 or www.centralnyhomes.com. When it's your hard-earned money on the line that you are investing into a home, it makes sense to choose a proven professional to assist you in making one of the biggest investments you may ever make. Josh's dedication of over 20 years to the home construction industry allows him to bring knowledge and experience to your doorstep. That means you can feel confident and comfortable with his service to you. Past clients love his attention to detail and thorough written reports. By allowing Priceless Inspections to help you make a well-informed decision concerning your property, you will find that a quality inspection is priceless. Follow Priceless Inspections on Facebook or call 315-525-8725.
This has been the Home Free Podcast with your host, Adeline Vandyke. Interested in buying a home? Look her up online at coldwellbankers.com/Adeline Vandyke or call 315-404-6431. Like us on Facebook at Home Free with Adeline.